I request everyone to please put your mobile phones on silent for a smooth conduct of the seminar. The meeting is being streamed online via Google Meet, so you can ask your friends to join the same. Dear all, I do welcome all on behalf of the Gokhale Institute of Politics and Economics Pune to the special session. Today we are honored to have Mr. Harshal Chitale as a guest speaker for the session. The topic of today's seminar is urban infrastructure challenges and opportunities from an Auckland perspective. Mr. Chitale is ex-principal economist of New Zealand Military for Environment. He completed his graduation from Delhi University and then moved to Brown for his master's degree. He has deep expertise in urban economics, land and housing markets, infrastructure financing and funding, environmental and competition economics, policy evaluation, and cost-benefit analysis. But before I call upon the speaker, I would like to request our Professor Dr. Sabita Sinha for the opening remarks.
Obviously attended the Law, Economics and Policy Conference here 2 days ago. So thanks for continuing the engagement with the Gokhale faculty and students. This time we get to sort of talk to the students, which is always nice. So please have the presentation. So we'll have about 45 minutes for the presentations, and then we'll have a Q&A session.
Thank you very much, Sabya. Can you all hear me? Okay, in the back. Thanks for the invitation to come and speak to your audience here. It was a very good conference to attend as well over the weekend. So thanks for putting that together. I know how much hard work goes into putting up conferences. So there was a lot I learned and took away from that as well. So having said that, let's get straight into it. So just a little bit of background. I've spent the last probably 12 years in New Zealand, predominantly in Auckland. Sabya was asking me what is that language under Auckland Council there. That is the Maori language. It's called Tereo. And the last words there, Tamaki Makoro, are actually the Maori name for Auckland. That's what it is. So I'm going to talk to you today about some of the policy work that me and our teams did while we were at Auckland Council, when we were dealing with some important challenges relating to how urban infrastructure gets funded, financed, delivered, and predominantly because how it is very closely linked to outcomes that you get in terms of how the city grows, in terms of where it grows, how densely it grows, and some of the impacts that it can have on how efficiently it grows in terms of what is the cost of growth when you fund infrastructure in different possible ways. And also what is the fairness of those mechanisms of funding the infrastructure. So that is what I'm going to get to. So housing is a key component of this whole conversation. So I'll just keep going. If there are any clarifications, do just put your hand up and ask the clarification. Otherwise, I guess we can take questions towards the end. So I always like to start with a disclaimer because of these days of social media and everything being online. It's very important to note that any views that I might express in the next 45 minutes or an hour are solely mine. Some of them are evidence and facts taken from public domain, but some of them can go into the domain of my own opinion. So just a disclaimer that anything that comes across as an opinion or a view is purely mine and not of any organization that I might be affiliated with. Okay, so why did I start to look at the issue of infrastructure funding? So that's what I'm going to start with. But briefly, very briefly, the outline of this talk. It is closely connected, as I said. Why I started looking at it was because of the trends in what was happening in the property markets in Asia and New Zealand, particularly in Australia and New Zealand, and the rapidly rising house prices that we saw over the last 10 years or so. So that's connected. So I'll give a little bit of a broad macroeconomic and a policy context sort of setting, a couple of minutes on what we were seeing in terms of the macro drivers of property prices, both on the demand side and the supply side. Then I'll get into the fact that infrastructure is extremely important for housing supply. Unless you have infrastructure, you don't get supply of housing, right? And so that's the connection between infrastructure and housing, and eventually standard of living through the route of housing prices. To get into the funding issues with infrastructure, I'll present a few of the financial realities that Auckland faces as a city and we'll just drill down a little bit into the income statements and understand what the current positions of revenues and expected capex costs, etc., are for Auckland Council, just to give you an idea of the scale of what we are dealing with. And then I come to the core of the talk, which is once we've understood what is going to need over in the future to fund infrastructure, there are various options in which you can fund that infrastructure, how you pay for that infrastructure. So the core of this talk is asking the question, how should we fund that infrastructure? What options might we want to select? And I'll probably use the work that we did as a focused example of how we decided to kind of advocate for a particular change in how we were doing things. And I'll show you some of the current updates to the work that we did and how that is sort of having percolating impacts around cities in New Zealand in policy making frameworks today. And of course, I'll end with some takeaways. And I hope that some of this will come across as useful and relevant, at least conceptually, to the audience here. At the conference, I started some of the things that I was saying with the preface that when you think about Auckland, it's a city of about 1.8, 1.9 million people, fairly homogeneous population. So the scale of the issues we are thinking about is very, very different to the scale of issues, let's say, in Indian cities, and definitely India as a whole, right? So the population size itself is very much smaller. So some of the key things that it leads to is you can have extensive participative democracy there. You can have extensive consultations. People, if they are reasonably educated and reasonably aware of the processes of decision making at the local levels, they feel engaged and they do participate in large numbers in discussions, responses to consultations, etc. So decision making is actually quite participative in those contexts. So that's just something I like to preface things with, because it can lead to very interesting discussions and debates in even local decision making. All right. So why did I focus on infrastructure funding when I was working in Auckland Council? So in Auckland Council, I worked at what is called the Chief Economist Unit. That was set up as an internal kind of economic think tank to advise policymakers. So if you thought about Auckland Council, it was about 19 or 20 councillors, all elected from their local wards, quite often from a business background or a legal background or a non-economic background, right? Quite often, the problems that they were trying to deal with or the challenges they were trying to address had large elements of economic thinking that they did not necessarily have as part of their previous education or during their professional sort of lives before they became, let's say, elected representatives of the city. And so our role was to provide that economic expertise, the guidance, the policy advice from an economic lens. So how did I start to get into this issue of infrastructure funding? Well, cities are hubs of economic growth and productivity. If you think about Auckland, it is responsible for producing about 45% of New Zealand's GDP, right? So it's an important engine of growth for the New Zealand economy. If you take developed economies around the world or even India, cities are where a lot of productivity enhancement happens. A lot of economic growth is contributed by cities. Right. So if you want cities to work well, what do I mean by that? So in Auckland Council, we had the motto that it should become easy and affordable and pleasant for people to live, work, and play in the city. Right? If you can make cities work well for people where they can live well, they can work well, and they can play, that is, have their recreation and things that make life living worthwhile. If you make that easy and affordable and accessible, then you've gone a long way towards making cities nice and welcoming places for people to come and live. And the connection with economic productivity and growth is obviously something that sits in the background, which is why you want to enable this to happen in the first place. Right, so we kind of take it as a given that cities are important for an economy to generate productivity and improve standards of living. As city administrators, as policy makers, as urban decision makers, it's important to make cities therefore livable and welcoming and affordable places for people to reside in. How is infrastructure important? Well, cities presumably have a geographic area that they cover. There's a lot of land, but land by itself is not enough to deliver the things that enable people to live, work, and play. So people live in houses or apartments, or call it dwellings if you might. There's commercial activities which require built form, construction. There may be warehouses, there may be retail spaces, there may be commercial offices, whatever. So to deliver all of that construction and building, you need infrastructure. So land by itself is just one of the inputs into what goes into building a city. Crucially, you need infrastructure, right? You also need a good amount of planning. That could be planning around how land needs to be used or how land can be used for different activities, right? So there are entire planning departments in urban decision making that work on the pros and cons of allowing more building, more density in a particular area, or zoning particular areas for commercial activities only or heavy industrial activities only. So there's a lot of thinking that goes behind how should you use land, where should you put different activities, and how should you organize the activities in a city. So planning and infrastructure are quite important. Um, so that's how I got into infrastructure, because I could see that it was heavily connected to the delivery, in particularly of housing outcomes in New Zealand and in Auckland in particular. Um, and then I slowly got into how infrastructure is paid for, because as the title of the talk says, it influences the overall cost of growth. How fair are we in delivering this growth in terms of who pays for that infrastructure, because infrastructure can be quite costly. And also it determines how cities grow, whether they grow densely or whether they sprawl outwards, etc. And also very importantly, how you fund infrastructure can also influence how planners decide where to put activities. So it does influence the incentives that planners face when they do their urban planning. Okay, so some sort of snapshots of what was happening in Auckland housing markets, right? So this is the first picture is from the Economist magazine, and there are lots of cities listed there. And Auckland was considered one of the most unaffordable housing markets in the world. This was a 2019 article, I think. And Auckland is pointed. Okay. Oh, that's okay. So I'll try to point. So Auckland is here, and the plus 75% there is just the rise in the index. So these are housing price indices. So think of a base of 100, and this talks about how much it has grown from a base of 100. Auckland is at plus 75 over a few last years from that article. So I'm just giving you some snapshots of how unaffordable Auckland had become. There's a news article there. Auckland has been ranked the 7th least unaffordable housing market in the world in a new report, which looked at the ratio of median house prices divided by median incomes in the city. Right. So Auckland, by all accounts, has started to become quite severely unaffordable. There's some affordability trends here, which I've displayed. So over the last sort of 15-20 year period, if you look at the right-hand side picture, it measures the proportion of income that people had to use to service their mortgages. So that orangish line lies on top of the green line. So the green line is New Zealand. So New Zealand had started to hit about very close to 50% by the end of 2023. Auckland sits way above that; it's 55%. So if you think about housing affordability and how much you're having to spend on servicing your repayments for mortgages, because most of your housing is bought with at least some part of it being a mortgage, a loan from a bank. 55% is quite high, right? Because that's not going to leave you too much more for all your other expenses. So it has started to become quite an unaffordable market, and the trend has been increasing over time. So just some house price trends. The median house prices, this is for all of New Zealand, that's the trend overall. I've only taken sort of the last 7 years or so. So that 2020, so the spike from 2020 onwards all the way to about late 2022, can someone guess what the impact, what was driving that sudden increase in those 2 years? COVID, and what happened during COVID? Yeah, so all the quantitative easing and the easy monetary policies meant that interest rates were driven down by central banks, and that led to extreme amount of borrowing in the real estate market. So this was a phenomenon that worked across lots of property markets all across the world. Now I come to Auckland. So you see the COVID impact was actually quite massive in Auckland. So Auckland probably property prices rose about 35-40% in 2 years. And now we're seeing the reversal of that as interest rates have started to go up, because central banks have started to try to bring inflation down, right? So they started to put interest rates up. So you can see the extreme sensitivity of property prices to interest rates in the Auckland market in particular. Uh, just some comparators to Auckland. So if you think about international labor markets, who is Auckland essentially competing with? With a lot of the east coast of Australia cities in terms of people wanting to move or deciding to locate where they want to live, right? So the immediate competitors are some of the eastern seaboard of Australian cities. You've got the Sydney, Melbourne, Brisbane, Adelaide a little bit west, but Perth obviously West Australia. But if you look again over there, Auckland, the price rise in Auckland is actually at almost the rate that, or in fact even larger than the rate that Sydney prices grew at, because Sydney started off at a higher base. So Auckland has actually accelerated its house price growth very fast, very rapidly over the last 20 years. One of the things that was driving, obviously, talked about interest rates, so I'll skip over this, but that's just showing you how mortgage rates sort of dropped during COVID and now they're back up. But also another trend that Auckland has been facing now, all of a sudden in the last year, is we've got massive migration starting up again after COVID. So borders were essentially shut down in Auckland for 2 years, and now migration is back up. And this year, New Zealand overall has had about 125,000 people migrating, which sounds like a small number, but for New Zealand is historically quite big. Mostly about 60% of those will end up settling in Auckland, being the biggest city. So Auckland will receive about 60 to 70,000 people, I reckon, this year, which is historically almost double its long-term average. So the long-term average of the net addition to Auckland's population due to migration especially is about 30,000 people. Okay, another characteristic of the Auckland housing supply situation or the housing market is so this chart is showing you how many new housing approvals were there for every 1,000 of population. So that chart kind of tells you for every 1,000 people how many new houses are being built in the city, right? And so if you look at Auckland again, the dark blue line, it is almost at the bottom of all its comparable Australian cities. So Auckland was not adding as quickly to its housing stock as relative to its population growth as were its competitor cities. So what tends to happen is when there are surges in demand, which is due to either population growth, lots of sudden migration, or a sudden drop in interest rates, which makes interest serviceability cheaper, that demand surge, right? If it's not matched by a quick expansion in supply, right, that leads to what would economic theory tell us? If there's a lot of demand increase and supply is not keeping up, the equilibrating factor will be prices. And that's exactly what we saw in the Auckland market, that prices were much more volatile when there were demand surges because supply was not very flexible. Of course, I should caveat that by saying construction is not not an activity of bringing a very easy commodity to market, right? It's got a long lead time. You've got to take the requisite planning permissions. You've got to get the consents from local councils. You've got to put the structure in place. So it's a long period from actually getting the permission to probably having a full house built in New Zealand. Is probably a year or even more than that. So there is a lead time, and the construction industry does go through cycles, right? So when borrowing costs, similarly for the construction sector, are low, they'll tend to build more. If their expectation of that house prices are going to start falling, they immediately pull back on housing, right? Because they are a business. Private sector housing providers are also businesses. There's some macro policy factors that were favoring investment in housing. So this is just some sort of flavor to tell you that you might have left-wing parties like Labour or traditionally what I call left and right, but Labour was sort of left of centre party in New Zealand. National is the right of centre party in New Zealand. Both of them claim to be on the side of affordable housing, etc., etc. Labour traditionally claims that it's on the side of affordable housing, but look at some of the statements that the Labour government had in its last sort of 3 years that they were in 6 years, in fact, that they were in power. So Jacinda Ardern confirms Labour wants house prices to keep growing. Now that's a strange statement to hear when house prices are already quite high, and they claim to be a party which wants to deliver affordable housing. But essentially, you'll see that the New Zealand economy is extremely connected to its housing market. So when housing prices go up, people feel wealthy. The wealth effect leads to much more business confidence. A lot of the small businesses in New Zealand are collateralized by property markets. So a lot of small business loans use the fundamental sort of property as collateral behind the borrowing as well. So a lot of the New Zealand economy is extremely tied up to housing. So having strength in the housing market is obviously very important for people who own houses and own businesses. Which doesn't mean that it makes it easier for new people to enter the housing market. It'll probably make it harder, right? Because it's getting more and more expensive. But this chart was just to tell you that macro policy in New Zealand has typically been favorable to investment in the housing market. In particularly, housing capital gains are not taxed. There are variations of that different governments try to bring in. You've got to hold your property for a certain minimum number of years, etc. But there's lots of loopholes that people manage to get their way around it. So essentially, for all practical purposes, there's no capital gains taxes on property. That's a huge advantage given to property as an investment class compared to, let's say, the stock market or other productive investments that you might engage in. There's something called interest deductibility. So if your interest payments are more than sort of the rental income that you're generating from, let's say, an investment property, then you can offset your income with these additional losses, so-called, on your income. So that's another advantage. And also local councils traditionally, even the property rates, so we're not talking taxes, but the rates to fund your local infrastructure have traditionally been quite low. So overall, it's a good bargain to own a property in New Zealand because you get a lot of favorable macro policy. Okay, so I just wanted to set that up as a bit of context. So now let's get into. So we talked about how Auckland was not quite building houses fast enough to keep up with demand surges. We've seen how infrastructure is very important for housing. So let's look at some of the numbers involved and how much money is actually required to fund Auckland's growth over the long term. So recently, I just saw Auckland Council has published its consultation documents for its next 10-year budget. So now there'll be feedback over the next couple of months and they'll eventually finalize it. So this is right now in proposal stage, but the detail that has gone into it means that you can almost say that the final document will end up looking pretty close to what the consultation document is. So the numbers are from the consultation document. So what does council actually provide in terms of infrastructure? So it provides all the water infrastructure, right? So the drinking water, the wastewater systems, the treatment plants and the pipes that take away the wastewater, and also all the stormwater arrangements. So if there's a flood-prone area, then providing the reservoirs and the collection ponds, etc. That is all under Auckland Council. It provides all the local and what are called arterial roads. So except the major motorways, so like the Bombay-Pune Expressway, for example, is the analog of a motorway in New Zealand. That is provided by central government, but all the other roads, the connector roads to the motorway and the key arterials within the city are all to be funded by Auckland Council. And then you have a huge amount of open space, and that can be quite a big asset base. So you have parks, community facilities, recreation centers, so that's your swimming pools and tennis courts and your gyms and all these facilities that provide recreation to people. So that's also within Auckland Council. So this is quite expensive, right? This makes the city livable, but it comes at a cost. So let's look at 30 years and what the requirements are looking like. According to the, so as I said, over the last 20 years or so, the long-term average population increase was about 30,000 per year. So over the next 30 years or so, extrapolating that, you can expect Auckland to grow by about 1 million more people. So right now it's about 1.9 million. It might be close to 2.9, maybe 3 million, right? So that's, I mean, I've gone for a long-term average because it fluctuates quite a lot. You know, a couple of years you might have low migration, couple of years you have high migration. COVID almost it was zero, borders were all shut. So to get out the fluctuation, I've looked at long-term averages. What was the unitary plan? I'll come to it a little bit. Actually, I might come to it now. So few years ago, 1915-16 to be precise, Auckland completed about a 5-year process, extensive consultation process, to say that, look, we want the city to grow. These are our growth projections. But our current land zoning laws will not allow or accommodate all this growth, given the rules that we have in place right now. So what happened was the outcome of all of that discussion and the independent hearings process was what was called the unitary plan. So this was one plan for the entire region of Auckland, which kind of changed the zoning rules for land use and enabled much more capacity for residential and commercial construction over the longer term. So it upzoned kind of areas that were only single dwelling zones It upzoned them to allow for townhouses, three-storied apartments, etc. So it added much more feasible capacity in building. One interesting fact there was that some of the suburbs very close to the city center, these are typically the wealthiest suburbs with the biggest houses and the leafiest, tree-lined streets. They were the least upzoned. So they managed to escape some of this upzoning because the residents actually fought back very hard to say that we want our streets to look perfectly like this. We don't want small apartments and townhouses to come on our streets, so don't upzone our area. So they managed to escape a lot of this upzoning. It's important because what that means is then you have to allow the city to grow far away from where the infrastructure, the amenities, and the jobs already exist. So it makes a difference to how the city grows. Uh, they identified lots of areas for future urban growth. So that's the future urban land supply strategy. Lots of areas were kind of identified. A lot of them are flood prone now, so they've kind of changed the zoning in a lot of those areas. So let's get to sort of infrastructure, right? So you need to service all this growth over the next 30 years. I've told you that Auckland has to provide all the water infrastructure, most of the roading except the national highways, lots of the parks, open spaces, recreation centers, etc. that people frankly have gotten used to. So all of a sudden you can't say that council is not going to provide a facility where you can go exercise or have a swim or play tennis, etc. So unfortunately or fortunately, it's built into the expectations now. So over the next 30 years, council expects to have a capital investment plan of about 39.3. So let's call it about $40 billion over the next 30 years. And we'll focus more on the capital investment, not more of the OPEX. Okay, so what are the key revenue sources? I've highlighted a few, but if you look at the rates revenue, this is the property rates. They are about $2.2 billion in 2023. Out of a total of about 6.67 billion as the total revenue that the city collects. So they're about 1/3 of the entire revenue. The two highlighted bits are what I'll come to: development and financial contributions and infrastructure growth charges. So these are paid actually. So these are some of the key sources. I'll probably go over just for want of time. But development contributions are, and I'll come to financing a little bit later. So the ones are highlighted in yellow, which total to about 620 million or so out of the 6 billion revenues, so about 10%. What are these? So what these are essentially when you want to deliver the infrastructure for growth, right? So to enable new housing or to deliver new office space, developers of those areas have to contribute their fair share towards the capital expenditure of that infrastructure. So those are called development contributions. Infrastructure growth charges are the same thing, but specifically for the water infrastructure. So development and contributions will cover things like transport, your parks, and other facilities that are provided. IGCs are for the water infrastructure. So taken together, conceptually, they're the same thing, and they cover kind of the fair share from the developers and the landowners towards the infrastructure that the city has to provide to enable that development to happen in the first place. Okay. So some numbers to remember: development contributions average about, let's say 25. Let's call it 25,000 on average currently, and infrastructure growth charges about 13,000. But the actual cost of enabling development is much higher, especially as you go farther and farther away from the city. You have to build much longer pipes. You have to transport all that wastewater to your central treatment plants much longer distances. The capex adds up very quickly as the distances increase. There's other sources, but I might not get into that right now. Here's what was happening, right? I'll go into the example first, and then I'll talk about what was happening. So what was happening was, at that point, development contributions were covering only a fraction of the capex cost of growth. Okay, so what was that doing? What was happening in the land market was the following: when sort of these faraway places, right, got urbanization. So that means they got, firstly, the land was zoned for urban development, right? The land value rocketed up straight away. Then when council said that 2 years down the line we'll build the infrastructure, the value went up even more. So think about like a new airport coming near your piece of land. All of a sudden your land value might go up, right? So this is exactly the same phenomenon that we saw in the data in Auckland. So So first of all, when an area was identified as future urban land, value went up. Okay. When infrastructure was actually installed, the value went up again massively. So just to give some scale, right? Values actually multiplied, 44 to 65 times the original land value when infrastructure was actually put in these pieces of land, which were originally sort of rural farmland, fringe city land, now converted into the ability to build residential housing on them. Okay, so what does that mean? When you actually allow urbanization to happen on these pieces of land, those landowners get a massive benefit in terms of their land value increases, right? So first of all, we were not collecting the full costs of your infrastructure from these landowners, probably only a third or a fourth. So that was a problem because someone has to make a the gap has to come from somewhere, and eventually it comes from the rates, the rate for the overall city rates collection. So that cost was being imposed on the existing entire rate paying pool of Auckland. Okay. Uh, So what did I do, or what did our team do? We quantified the scale of the problem, right? So actual costs of developing infrastructure versus the development contribution charge. So on an average, let's say 15,000 houses are approved to be built in Auckland, and let's assume that there's a deficit of $20,000 per house, okay, in terms of how much you're able to collect or how much you're collecting from your contributions. That amounts to about 300 million per annum. Okay, that's a big number. So it adds up quite quickly. And I'm being very conservative with the 20,000. So when I get into this last example of this new area that's being sort of developed, that shortfall is going to be way higher than 20,000 per house. It's going to be in the region of about 80,000 per house. So that's a massive shortfall in terms of what you're charging those beneficiaries of development. Okay. So what we do next? Well, so what do we try to say? Look, we quantified the problem, right? Council is often working under budget constraints. There are competing demands on resources. Everyone is fighting for resources. In particular, I'll go up to the slide on financing. Uh, so I showed you all these revenue sources for council. Revenues, sort of once they're collected, council can go to the capital markets and borrow against those revenues, right? So they say, look, I have an income stream. I go to the capital market to borrow. So how do you actually pay for this infrastructure or make it happen is through financing, right? So debt financing. So funding and financing are quite different. Financing is how you pay for something. Funding is who actually bears the cost of it, right? So this is how things were being financed, the capex, through capital market borrowing. There were lots of ratios that councils have to work under. In particular, about 270% is the debt to revenue ratio that councils have to work under in New Zealand. Because they have credit ratings, the capital markets monitor this quite closely. If those ratios start to go out of whack, you might get a rating downgrade, your borrowing cost will go up. Okay, so there's always constraints to how much you can borrow based on what your revenue base is. And there's a few other reasons for why those constraints also were quite binding. So when you're operating in this constrained environment, why would you want to restrict the revenue you're collecting when you have the ability to collect more revenue, right? So when you have the ability to charge DCs that fully recover the cost of growth, why are you not doing it? So partly that's where the political economy comes in. A lot of these large fringe landowners are big companies, vertically integrated quite often, big construction companies who land bank. So they buy huge pieces of cheap farmland around the city, expecting that the city will grow there at some point. And then they actively lobby the council to rezone their land over time. So they say, hey, don't you want to expand the city? You need more housing. Why don't you expand the city towards our way? Because they know that that gives them the land value sort of uplift. Okay, so that's the game they play, and particularly they're incentivized to play this game when they know that they're not going to have to fully fund the infrastructure capex. Okay, so that incentivizes them to keep playing this game more and more. So all of these micro sort of political economy issues start to come up. So you've got this massive revenue sort of thing that you can collect, which will enable you to borrow much more because you have to work under those constraints. So that's something we looked at. The second argument that was constantly sort of put to us when we started to do this work was, if you put up the contributions that we have to, contribute to council, we'll just pass it on to the end house purchaser. And what's going to happen? Your house is already expensive. Now they're going to be even more expensive. So they used to argue that, oh, your city is going to get more and more unaffordable. So we said, hang on, does this actually work in practice? So we did some microeconomic thinking. We talked to developers, and we did a whole lot of sort of literature review on the empirical research on this. And paper after paper and developer after developer told us that that's simply not how housing markets operate. So developers, when they develop a house, they have a very limited ability to influence the final price. They are essentially price takers in the final market. And yes, there's product differentiation based on where you're located, where your house is, how big is it, it is all that sort of stuff. But essentially, you're a price taker in the final home market. Uh, okay, so if you're a price taker in the sort of retail market, right, and if my cost of production goes up, if I have to contribute more towards the infrastructure, then building that home essentially is more expensive for me as a developer. So either I have to tolerate a smaller profit margin and continue operating with a smaller margin, or I have to figure a way out of passing that cost on somewhere else. And so the way it works is they actually end up bidding lower prices for raw land for development. So what developers do is they go to sort of raw landowners, right, farmers or people who have rural land, and they say, sell us this land, we'll put houses, and this is how much we'll pay you for it. If they are having to contribute more now, what they end up doing or what they'll end up having to do is actually bid down the price of the raw land. So it's those landowners now who will actually be able to sell that land for a lower cost. They will not be able to keep the premium that they were initially getting. So in fact, by putting up these DCs, you're killing sort of two or three different birds. First of all, those beneficiaries of the value that they were getting, the high land value increase, they are the ones who will contribute more towards the infrastructure, right? And also, if you start looking at economic efficiency, when you accurately start to send price signals that it's actually much more costly to build over here than over here, economic actors respond to those price signals. Okay, so the city will end up growing where it's least costly to grow. So that also kind of starts to shape the city for much more economically efficient. So that's the sort of thing that we saw in literature reviews as well of lots of work that was done on this. So we wrote a series of papers. So I wrote lots of papers. Our team was constantly presenting in seminars and different conferences, planning institute conferences, government working groups, etc., etc. This was sort of a 2-3 year process until finally, the second last line, Hamilton City, which is a city close to Auckland, they actually put up their development contributions. They almost doubled them and announced that we are going to charge double because that's how much it's actually costing us to build this infrastructure. And we expect the parts that are benefiting from it to pay their fair share. So they actually put up their DCs. Expectedly, there was pushback from the development community and the landowners in those areas. There were about 17 appeals between landowners and developers. The case went all the way to the High Court, and the High Court threw out all 17 appeals. And they said that council is well within its rights to charge this amount, as long as the calculation of the costs and everything is done transparently and is presented publicly and able to be queried by different groups of people. So that was a big win for Hamilton City. Auckland got emboldened, and I told you about this area called Drury, right, which was a very far away area from the city, which was now being opened up for urban development. The cost of developing infrastructure there, the numbers will boggle you. They were about $170,000 per house, per housing equivalent unit is what it's called. 170,000 New Zealand dollars. At that time, the development contribution for those areas with the old policy would have been around $25,000. So the under recovery per house would have been about 150,000 New Zealand dollars per house. You saw the impact that a $20,000 shortfall had on the council revenues. Imagine what a shortfall this would have created. And so in some ways, what happens is when you have financial crises, policymakers have nowhere to go and they have to actually do something. So sometimes crises actually are good because they actually help to shift policy to somewhere better. Okay? Because the financial crises are quite often self-imposed by bad decision making. So that's what happened. Auckland actually now has put up in its consultation document the DCs from 25,000 to about 83,000 per dwelling, which is still only half of what is actually required, but it's still an improvement to 25,000. So that was a win for us as well. So that's the latest. This is sort of This is 27th of April 2023. Auckland Council approves 2.3 billion brewery plan, set to collect 1.1 billion from developers. So that's that half, 83,000 per dwelling out of 170,000. Okay. What's in this proposal, etc., etc. There's this developer who develops really nice apartments, and he is actually a mathematician by training, and he's a really brilliant guy, and he does beautiful quality apartment developments in Auckland. And he was kind of joining the mayor yesterday and saying, these are these money grabbing French developers, etc. So they're all talking to the same issue, the political economy of how landowners buy up all this land bank, and then ask for upzoning, etc. So there's these latest headlines that were happening all over last year. But anyway, so the success story is that the, the the things are moving in the right sort of direction in some sense. You're recovering capex charges from those who benefit from that infrastructure much more fairly. It reduces the burden on existing ratepayer bases who are otherwise having to subsidize all of this, right? And it helps the city to grow in areas where it's least costly to grow. So it shapes urban form in a nice way. In particular, if it's going to be this expensive, right, to grow in areas like 50 kilometers away from the central city, etc., and development becomes infeasible because farmers are now saying, well, I can't sell you this land for this cheap. Remember that the land offers are going to get lower and lower. Then that disincentivizes the city from sprawling too far out. So what have you done by sending the accurate price signals to the market? You've got much more economically efficient growth of cities. So it disincentivizes this massive sprawl. And sprawl also has some other kind of unintended consequences, right? So the second bullet point there is when a city sprawls out of shape because of some of these poor policy sort of decision sort of frameworks, you've got to build motorways far away to everywhere. You've got massive expenses, obviously, but then it leads to people having to commute long distances to their work, which adds to emissions footprints. Transport is the second largest emitter of greenhouse gas emissions in New Zealand. So you have all these, what economists will know as negative externalities of too much urban sprawl. So you're kind of killing a lot of birds with, this sort of policy change, policy tweaks, etc. And this issue now has really come to a head. I'll just end on this note with the water infrastructure. So I actually think that the revenue shortfall that councils have been generating over the decades means that our water infrastructure in New Zealand is actually crumbling. By first world standards, there's been heavy underinvestment in the water infrastructure because you were not able to recover adequate amounts from people who were benefiting from that infrastructure. Everything was being subsidized by ratepayers. The politics means that people fight back when rate increases are too much, so you're not able to collect as much rates, etc. So there's underinvestment over the long term in your maintenance of your water pipes. So we've got constant sort of complaints of pipes leaking, wastewater pipes getting mixed with the stormwater network, all that sort of stuff. Massive underinvestment, which actually became a huge political issue in this election. And the National Party, which won the election, actually campaigned on this issue. That there was a proposal put by Labour to change how water infrastructure is funded. They wanted to take it out of the hands of council so that these independent entities could borrow much more, etc. So this has become a big political football. National came in and sort of scared people into saying water assets are community assets. So you can't allow Labour to take away your community assets. We'll do it differently, etc. But the genesis of all of these problems, I think, come from some poor policy making around how infrastructure is funded, who pays for it, and therefore what kind of incentives sort of are in place when rate collections are happening, when politicians are running for elections, all that sort of stuff. So I think I'll probably stop there. Apologize if I've kind of rambled around a little bit, but I was trying to stick to the time. It's 4:45. Hopefully I've given you enough to kind of chew on. So happy to discuss or take questions.
Great. Any questions?
What is the system there to determine the compensation for land which the government is acquiring for public purpose?
Yeah, that's a very good question. So essentially, that is governed by what is called the Public Works Act, and there is a legal test. So the government has to demonstrate that the purpose for which it wants to acquire the land is going to generate wide enough public benefits. So there's a legal test around that. They have to demonstrate that. If they get past that hurdle, then there are requirements, there are formulae in terms of the current market value of the land. Uh, and also, it also depends on, it comes down to bilateral bargaining in some sense, but there are some minimums that the government has to respect. So it cannot go below a certain percentage of the market value of the land. I don't know exactly what those percentages are, but essentially, to cut sort of a complicated answer short, it is quite a difficult thing for the government to go through all of these processes, and essentially the Public Works Act has not been used in decades. So essentially, governments will rely on voluntary sale of people saying they'll make people offers saying we would like to build, an arterial road around, behind your house or whatever. We need a bit of land. Can we come to some bargaining and some solution? Compulsory acquisition is a political minefield. It's almost never been resorted to in the last few decades. But there are some legally, there are some formulae which determine some minimums in terms of the compensation that has to be.
One more question. The- In New Zealand, bulk of the development has gone around in Auckland, in that area. Why the South Island has been relatively not even looked upper for building new infrastructure for cities?
I think there is a historical element to it. So Auckland had traditionally the harbour and the maritime trade routes, etc., meant that initial settlements gravitated towards what were a friendly harbour route for trade, etc. So there is a historical element to it. The South Island, uh, the ports in the South Island are sort of Dunedin on the east coast, etc., have some historical city formation patterns happening. But essentially, the geography and the history of sort of where trade routes were has played a big role in that. And if you think about the population of New Zealand, it's only 5 million. And to have a critical mass for a city, you need sort of a population density. And so we're already talking small numbers within which there has been a natural gravitation based on historic trade routes and where the commercial sort of connections were. Uh, I think there are cities. So Christchurch is a city in South Island which has grown around its mostly its dairy industry, which was large pastoral farming, and the meat industry as well. So Christchurch is an example which has grown around that activity in particular. So primary and agricultural activities are what support some of the urban development in the South Island, with a little bit of port and now services and educational activity around Dunedin and University of Otago in the east coast of New Zealand, in the South Island. But the pull of Auckland now is quite large. So the economic base, the industry mix around Auckland is the non-primary industry mix is quite dominating now. So unless you have other pockets of economic activity that can come up in these other parts that have an actual gravitational pull, I still reckon Auckland and some maybe Christchurch and Wellington will continue remaining sort of the key attractors in New Zealand.
Your last pattern, political will take hard decision. Actually, in Gokhale, it is inversely happened. It was developed for one ground floor only for flood persons. But actually there are three-story buildings happened. So it will happen our Vikas or your statement.
Sorry, can you just so you were saying? Can you clarify the question? So I didn't quite understand the question, to be honest.
No, question is that political will take hard decision. Actually, it will not happen.
True, and maybe that's where I put that second qualification there, where quite often it is when you reach a crunch time, some kind of financial crisis, or you've run out of money, That's where actors are forced to act in some sense. I mean, being in India, I guess the famous example would be our balance of payments crisis, which really forced India to think about what economic model it was taking in the early 1990s. Is the biggest example I can think of. So maybe you need more crises to make things happen, but it's context specific and what's happening in that society at that point in time. So I mean, I don't have any sort of specific comment to your example, but yeah.
Thank you very much. Very nice lecture. My question is that population growth of New Zealand is extremely low. Total fertility rate is 1.6. So whatever population is growing, it is through immigration. So now immigration policy can decide about the housing. So my question is, who are the new buyers? The buyers are these people who are the immigrants, and how the immigrant then makes the transition to citizenship or included in that. So whole immigration policy becomes important. But I see that New Zealand has certain very progressive policy in the sense that migrants have voting rights, you can correct me, at a local level, local party level. So there are things, but the future, so that is one thing. Second is that Auckland having high level of primacy. So second largest city is something like 5 or 6 times small. So what can happen, that internal distribution of population, internal migration can play a greater role, and from a smaller city, people can come and still Auckland can grow.
Yeah, excellent question. So immigration policy has absolutely been under the microscope for the longest time. In particular, last year, when I said that immigration has been double the long-term average all of a sudden, particularly because our housing supply growth is very slow. So now that is the key political debate, which is if infrastructure growth and our housing supply growth is not keeping up, why should we have immigration at such high levels? So now the problem there is there are historic kind of skills gaps that have built up. So the health sector is crying out for labor. There is shortage of teachers, shortage of bus drivers, which can only be filled with attracting new people to come and settle into New Zealand with the appropriate skills. So there is a delicate balancing act for the government to do, which is how do you balance out the short-term needs of filling some of these labor market gaps, which are not being filled locally, right? Because you might have a program to train up your local population, but that takes a few years. So you might want to import ready-made people, to fill up those short-term gaps. So that is a constant pressure in countries like New Zealand. But balancing that is the long-term concern, which you rightly identified, which is what about infrastructure? What about housing? Where are these going to people end up living? Your question about who is buying the houses is also a really interesting one. I haven't gone into the data of late, but if I'm not mistaken, first home buyers now are highly capitalized. So just to backtrack a little bit, the deposit requirements to get a loan now are quite stringent in New Zealand. So you need at least a 20% deposit, and you can borrow only up to 80% of the value of the house. So if your house value on average in Auckland is $1 million, that means you need 200,000 New Zealand dollars to put down as a deposit. Now, very few people will have that kind of deposit at an early stage of their life. So some of the skilled migrants who might have built up their savings, etc., or who have some family support coming in, are entering the housing market. I can look up the latest numbers and trends of what the division of who is actually buying in this market currently are. But I can tell you that currently the housing market is very slow. It's going very slow because literally the buying capacity is very low right now. And even the investors are very kind of nervous as of right now because they are getting in at such a high price. So the rental yield is not justifying, and they're not as confident about capital gains in the long run. So even the investors are kind of staying away from the housing market.
So if you could take parallels from your Auckland Council and solve 3 things about the Indian urban infrastructure, what would they be?
I think, look, I'm not an expert on I haven't gone down into the financials, let's say, of cities, etc. Professor Patel here, who's probably far better placed to answer some of these questions. But I think some of the things are easily transferable, right? I think as a resident base of any city, right? I think the more engaged, the more aware you are of how things are getting paid for. So if I ask you your local park in your neighborhood or the local road just outside your home, who is paying for it, what funds are being, how are those projects getting delivered? I think that's a good place to start. I think awareness, being more engaged in decision making, understanding how things are being funded. I think the beneficiary pays principle is quite good. The subsidiarity principle, so people who benefit and are the closest to the problem, that's where the problem should be solved. So there are some transferable kind of general principles of how things should be funded. But the details, I think, are probably something I'm not extremely familiar with in the Indian context. It's something that I would actually love to be more familiar with. But yeah, I think there are people in the room who are probably accessible to you. I would strongly encourage you to interact with them.
Thank you.
Harshal, can I ask a sort of question related to that? So you mentioned that it's quite consultative in Auckland in terms of policy making. Can you give some examples how they implement this kind of consultative process?
Yeah, sure. So we have. I showed you the kind of the Drury plan, right? So whenever a new area is kind of decided that we're going to develop the city further in this area, the entire structure plan of that area, how infrastructure is planned to be funded, who will end up paying for it, how much, will central government contribute a little bit, all of that is drafted by Auckland Council sort of officers, and that is put out to the public for feedback through online channels, through printouts being distributed at various venues, various forums, etc. And people are invited to meetings. So there's a schedule for it over 2 or 3 months, so people can engage in community meetings, etc., and provide their local feedback. So it's a quite deliberate process to involve the entire city in decision making. That's one example. So the unitary plan process, I think, received 15,000 plus submissions. It was a 3-year long process, extremely consultative. The Auditor General will get involved if there's a complaint that people complain that there wasn't enough consultation. We weren't asked at the right time. We were asked too late to be influential or for our voices to be heard. So there's lots of checks and balances who are actively working to make sure that the decision making is very participative.
My question is regarding the timeline of the decision which are made. Like you mentioned about you increase the development charges, right? And that impacted the purchasing power, like reduce the purchasing cost of that land. So is it like first the council itself told that for this area to be developed, we are going to increase the charges. That's why it got influenced, and then, or is it like how things happen?
Yeah, that's a very good question. So in this case, they will be bringing in the change. So from the time that the consultation document was put out, I believe the new amount, so the 80,000 plus 83,000, will come into effect from 1st of July. So, and your question is a very good one, because one of the issues that we dealt with in our work was to allow developers a transition period. So not you can't expect developers who've already paid for the land, assuming the older contributions amount, so they valued the land accordingly. You can't suddenly surprise them by tripling the contributions. That's a little bit unfair. So what we argued for when we wrote our series of papers, etc., was allow a transition path and be very clear. So it's some kind of forward guidance that the Reserve Bank might give, that over the next 2 years we expect the interest rate path to be so much. So we wanted some forward guidance to be built in and some kind of transition path to a full recovery over the next 5 years or something, so that when developers are looking for new pieces of land to buy, they can account for future potentially higher contributions when they value the land. I think that's a big area.
Just a small clarification. What's the rental yield in New Zealand?
The rental yield, latest figures I would not know, but
No, order of magnitude.
I would say probably I don't want to be wildly off the mark. I want to be at least somewhere in the right ballpark. So let's say 30,000 per annum rent for about 800,000 house. So that's about That's what 4%, probably around 4.
That's double what we
That's
have.
high.
Is it high? Okay.
Yeah, reason.
Maybe 3 to 4%, I would say. And it varies according to the neighborhood and the type of dwelling, etc.
Just one comment I would like to make in the context of the takeaway. Uh, basically the argument is very well put, which is you put in infrastructure, there are externalities, there is unearned income, and you take away via development charges. We know all that theoretically. The problem in India, and a couple of studies I had done for Mumbai Metro Rail or MTHL and other things, is we take such a long time that the price discounting already happens. And then the legal problem is, as you were able to say that the courts brushed aside those 17 objections or whatever, uh, doesn't happen because the rational nexus argument is such a powerful argument that courts make, and it's very difficult to show that you will be making this gain because of the externality of infrastructure. So, for example, in the Mumbai study that we did for metro being full, zilch, there was no increase in the land prices or because of metro. MTHL already in Uran the prices are discounted. So the takeaway is take your decisions and implement them fast. Otherwise, everyone has a chance to reposition, and the old guys who are making rents will continue to make rents. So, the only place where a variant of this land value capture is has been somewhat successful in India is in the Outer region, which is the Ahmedabad metro region, where essentially what you were describing happened. That people were told that you got this land, give the government 40%, the government will put in infrastructure, your 60% will now be valued at more than 100%. Requires credibility of government, and I need to believe in that.
Correct.
So if all of these things happen, then land value capture is the correct way to go about doing infrastructure, and that I would take. And one final point, the eminent domain thing that you answered, that nobody uses it. Nobody uses it, but neither is it nowadays very useful to talk of the public good. Because you can't, the United States actually, Supreme Court has a judgment which says that putting up of one of those Walmarts is a public good. And therefore, because they claim that the local population gets employment at the turnstiles or whatever it is. Now, if you start expanding, you can't codify and say beyond the obvious few, right? So this public good argument is very difficult to specify. So these are difficult issues, but I think the real point of for this presentation is well made at a different scale altogether, but well made that essentially make use of externalities and make the infrastructure pay for itself as much as possible. Thank you.
Correct. Yeah, excellent comments, and I absolutely agree. I mean, one of the submissions of what is now the Infrastructure Commission in New Zealand was essentially, and again, we in various forums also said that when you make the announcement itself, that's where you announce the infrastructure charge, the policy. So, because the announcement effect, as you said, will immediately move the market. As soon as you announce it, the market starts to adapt its pricing. So that's a very taken point. And the other one being the key, one of the key parts of the complaints of the developers when they went to the court was all of these Excel spreadsheets are non-transparent. We don't believe these costings. Can you prove the nexus? How come all of the other cities not benefiting to this tune, etc. So it was exactly all of these things. So they went very deep into all the calculations. They audited all of that, and perhaps council was able to demonstrate that everything was watertight, and that's how they managed to get the appeals kind of quashed. But I agree, all of these are very complicated, and yeah, it requires that institutional infrastructure to work fast and work well for all of it to be working well.
But in Pune, a reasonably well received experiment has been done. There is a ring road being constructed around Pune, 130 odd kilometers total length. And in that, PMR, the Pune Metropolitan Regional Development Authority, who is going to do it, they have identified 9 townships. Townships are probably 3,000, 4,000 acres, not much larger than that. And the land acquisition plan was that they will take the land from the owners, and that will be half of what the owner owns. So he's got 1 acre, they will take away half acre. Their job will be to develop the basic infrastructure, roads, sanitation, everything. And on the remaining half that's left with you, they increase the floor space index. From normally 1, they jumped it to 2.5. And the first township which is taken place now outside the Balewadi area, it has gone through reasonably smoothly. Hiccups are there, but they, for the first time I saw consultation which you described actually happened in Pune. 6 or 7 meetings where 700, 800 people, largely farmers because it's an agriculture area, they did attend. And on the second session, they said we are here to answer, and the last question was answered few minutes before midnight. So everybody was present that way. So that kind of experiment has gone so far quite well.
Yeah, that's very encouraging, and yeah, the sort of trading of development rights in exchange for the land that you want.
This is old TPS scheme from Mumbai. This is old TPS scheme from Mumbai.
So I guess the takeaway is there are examples that work, and that could be used as case studies.
There's a question at the back.
So Harshal, while you were quantifying, did you take ESG into consideration? How did you quantify ESG? What parameters were there?
No, that's a very good question. I suppose you're talking about sort of when the city grows very far away, the emissions footprint and all the other externalities. We didn't even need to go that far because even the raw financial numbers were huge. So to make our case itself, telling council that it's a 1 billion problem for you every year was good enough that we didn't have to scrape the bottom of the barrel with the externalities of emissions and put a carbon price of $80 per ton, you'll get so much. We didn't even have to go that route. But I have worked on projects where in cost benefit analysis, you have to include some of these other externalities to make it all add up as a convincing package to the policymakers to say it's worthwhile. So point taken that there are cases where you do need to account for some of these to make it all convincing, sound convincing.
Also with the skyrocketing prices in the real estate sector, as you said, was there a spillover effect into the food and the non-food basket there, generally, with regards to the monetary policy?
Okay, so do you mean that people were spending less on other components of the consumption basket? I haven't specifically queried the data, but I saw an article which said that the volume of essentials that were purchased last year has actually gone down. So nominal is no use. The actual volume of food and some categories of food has actually gone down, if I'm not mistaken. Just coming back to that internal migration, that earlier question, there was actually an out migration in the last census. What the Statistics New Zealand found was that Auckland has actually lost people to other cities, and a primary driver was the unaffordability of housing.
Thanks, Harshal, for this very engaging and insightful. Thanks again.
Thank you, Mr. Chitale, for giving your valuable time and sharing the wisdom with us. I would like to thank each and every member of staff and faculty for making this program a success. Last but not the least, I would like to thank our audience for such an engaging session. Thank you.